You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and it's the first day of March 2022. Well, lots going on in the world, the headlines, etc. But there's a lot more going on than that. We follow crypto very closely and digital assets, and that is a whole new emerging. It's getting to the point where universal awareness is coming, and then universal acceptance. And I've laughingly said that, as Klaus Schwab said, you'll own nothing and you'll be happy to own nothing. But I laughingly say that he's referring to NFTs and digital assets. You'll be owning this thing, but it's really just a blockchain entry. But there's a lot more to it than that. I'm really just joking when I say that. Let's get an expert on with us. Douglas Borthwick is with us now from INX Digital Assets. Douglas, it's great to have you on the show. There's so much misunderstanding with you, the public, as to what a digital asset is, what a security token is, and why you should care about it. So why don't we start with that first, and then you can tell us what you guys are doing now.
Sure. Well, there's cryptocurrencies, obviously, and I think we all know what they are. It's like Ethereum, Bitcoin. They're utility tokens that a lot of people believe shouldn't be classified as securities, but the SEC seems to think a lot of them should be. Yeah. And then there are security tokens, and security tokens are digital assets that have filed with the SEC, either as a public security or as a private security. Now, a digital asset means that there's actually a digital security is actually an offering memorandum that's been filed at the Edgar database that says this is what the buyer or the token holder has rights to. And it could be rights to revenue, it could be rights to equity, it could be rights to profits, it could be rights to really anything. There's infinite different ways that you can use it. And it's a way for people to invest in ideas or companies or projects that they believe in, and they know what the cash stream is going to be on the back end of it because there's an offering memorandum. And if the company fails to live up to that, well, then there's going to be legal consequences for the company. And I think that a lot of people that invest in digital securities are looking for either exit strategies on private equity investments. Normally, if you invest in a private equity, you may be locked up in it for years because there's no liquidity. When it becomes a digital security, there's liquidity and it ends up trading on an ATS, an alternative trading system, which is sort of like a mini exchange, but allows someone to be able to buy and sell to other like-minded folks. And people like liquidity in private investments. Now, when security tokens first came out, people thought bricks and mortar, and they said, well, let's do security tokens that are backed by real estate, fractional ownership of real estate. That's going to be what people want. And some of the first security tokens in the private space, either Reg D or Reg S, were of that nature, where you could buy fractionalized ownership of a building or of a resort, like let's say the Four Seasons in Aspen. But since then, there's been changes, and people have realized, there's other things that people want, and people want to have ownership, let's say, of equity, or they want ownership of cash streams. Now, my company, INX, did the first ever IPO in the blockchain of a public security, an F1 prospectus. And what we sold was 40% of our cumulative net operating cash flow or profit when we have it. And when we have that, we'd have 40% that be distributed into people's wallets that invested in our token. And we found out that that was quite popular with folks. We ended up with 7,250 investors from 74 countries. The average age was 42 years old. Now, the exciting part about a digital security like ours is you can go on etherscan.io and you can actually watch as people are selling it or buying it. You can dig into their wallets and see, how many have they sold? How many do they actually hold in their wallets right now? Are they buyers and sellers making markets, or are they actually investors that have been holding for a long time? There's a tremendous amount of data that you don't find in the legacy space today. But also the digital security on our ATS trades 24 hours a day, 7 days a week, 365 days a year. If you're an international investor in US securities, legacy securities like Nike, you got to be awake when it's trading if you want to trade it. With a digital security, you can trade it in your own time zone when you want to. With a digital security, you can also custody it yourself on your MetaMask wallet next to your NFTs or your digital cryptocurrencies. And so, you don't have to worry about rehypothecation or people shorting it. There's a lot of very good positives for both the buyer of a digital security, but also the issuer of a digital security.
Hey, and let's go back to something you said, rehypothecation, MF Global and that notorious scandal, which never happened anywhere because John Corzine was involved. He was the head of it, MF Global. And basically, it was like a scene out of South Park where the kid goes to the bank, gives him his money, and the officer deposits it, says, and it's gone. And that's what happened with MF Global. So the ability to prevent rehypothecation, and that prevents short selling and multiple people claiming title to the same collateral, which we've seen happen quite a bit in China. All these things are stopped by it. So it's kind of like a digital enforcer of integrity, isn't it?
There is a digital enforcer of, I guess you could call it integrity, but smart contracts do a lot of things. We issue our digital security on something called ERC 1404. Now, it's a really cool standard because what it means is if you own Bitcoin in a wallet and you lose your wallet address, you've lost your Bitcoin forever.
Tell me about it.
Your Ethereum and it's on a wallet, you've lost it forever. With an ERC 1404 token, if it's on your wallet and you've lost your wallet address, that's fine. We can revoke from that wallet and reissue it to a new one. Let's say your wallet's hacked. People get wallets hacked all the time. They're conned into giving over their seed phrase by someone that hits them up on Telegram. Well, what the ERC 1404 does is it looks up to the blockchain and says, hold on, is the wallet I'm moving to whitelisted? And if it's not, it refuses to move. And that's very, very important. I think that the SEC wants to make sure that someone's IRA doesn't disappear because they had a boating accident, or someone's IRA doesn't disappear because someone hacked their wallet. And the ERC 1404 certainly mitigates a lot of these types of situations. And that's the smart contract and the blockchain that's really working for you on a security basis.
And it's interesting because I've got 0.2 Bitcoins floating around in the universe. I updated my phone software, not knowing it was going to erase my key when I did it. Now, back then, that 0.2 Bitcoin was worth about $100. No big deal. Now it's worth 10,000. And I'm like, should I go to a hypnotist and get some regression here to figure out where the heck my Bitcoin's at? It's a real issue, what you're describing. On the other hand, do you forfeit privacy as a result of having that accountability and that trackability?
Well, you don't give up privacy. If you think about it right now, if you own Nike stock, the DTCC knows that Morgan Stanley is holding it in your name, and you know that Morgan Stanley is holding it. So, if the issuer wants to know who you are because they want to send you a dividend, they can find out who you are. The nice thing with digital securities is, obviously, it's a public information of who owns it, but you don't actually have the person's name. Instead, you have wallet addresses that show up, let's say, on Etherscan, and they show that this wallet holds these tokens, but there's no name attached to the wallet. And so you do have some privacy, but the issuer also knows exactly who you are, so they can send you dividends directly as opposed to using a third party. And that means that but they have a $100 dividend. $100 dividend goes into your wallet in the form of Ethereum or USDC, as opposed to maybe $97 getting into your wallet because they've got to pay this guy, the next guy, until it actually hits you. So there's a lot of efficiency that comes in, but also by the issuer knowing who you are, it means that when you call and you say, listen, I've lost my tokens, then you can say, okay, well, I know who you are, so I can reissue them to you. So, the whole concept of privacy for a security that's issued under the SEC's regulations, everyone knows that it doesn't exist. And that's one of the reasons why the SEC and FINRA are there. It's because you have to go through KYC and AML anyway, just to onboard and be able to trade these products or trade on a platform.
Yeah. Now, one of the things that I haven't appreciated about the digital asset environment is that disclosure. It's the Wild West. So once we start registering them, and look, there's loads of flaws with the SEC and our current securities regulation system, both in the United States and all over the world. But there are these minimum disclosure requirements. For instance, if the guy running the show is a convicted felon, all right, that might not stop you or stop that issuer from going forward with the issuance, but they got to put it in writing somewhere. So I like the one thing that has worked in the U.S. securities regulation system, it is the concept of disclosure. It might be disclosed in such a way that the average Joe Sixpack has no understanding of it, but somebody out there will. So that is a real plus, that the disclosure requirements that are endemic to the U.S. securities regulation system are all present in the crypto space here. Because if you want to get them registered, then you gotta write your prospectus, right?
Don't just survive, thrive. The Financial Survival Network.
Today's show is brought to you by Mustango River Resources. Their flagship projects are located in Kirkland Lake, an established gold camp that has historically produced over 70 million ounces of gold. The Kirkland West project is a high-grade gold project beside Kirkland Lake Gold's world-class Mikasa gold mine, one of the highest-grade mines in the world. Umeja project is an advanced stage project with 600,000 plus ounces of gold along the Cadillac Break, 25 kilometers east of Mikasa. Their projects have the potential to transform into another world-class mining camp in the Kirkland Lake District. Make sure you go over to mistango.com. That's mistango.com. Take a look and sign up for notifications. Stock is traded on the Canadian Stock Exchange, ticker symbol MIS. For more information and to sign up for notifications, go to mistango.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, you do for a registered offering. For the private offerings, it's not a prospectus. It's more of a, you just have to really file as opposed to ask for permission. But certainly there's a due diligence process that comes in from a broker-dealer, where the broker-dealer looks at all the officers of this company, does a background check on them, a bad actor check, and a due diligence on the company to make sure they're actually doing what they say they're doing. Now, how many utility tokens are, so-called non-securities that trade on other exchanges can you actually point to and actually see who's behind it?
Yeah.
There's not a lot. And so, the concept of rug pull, I'd say, is diminished somewhat by someone going the securities route.
Yeah. Yeah. Well, they got to go through the motions. Even if it's a private placement, it still has to meet certain disclosure requirements. And obviously sophisticated investors don't have to worry about this stuff. They can perform their own due diligence, but you as an investor, you're reliant upon following, individual investor, you're reliant upon public filings.
Well, me as a broker dealer, I have to make sure that anything that I list or anything that I raise capital for is actually for that company, is going to that company, and is being used for the purposes that they've said they will. But also I have to make sure that everyone that's buying it is someone that's known to me as a broker dealer. I have to do KYC and AML and absolutely anyone. So it's a very closed system, a closed gated system. Just like when you onboard and you want to buy Nike stock, you got to go to E-Trade. You got to show your driver's license, your utility bill, so they have your address. It's the same thing for digital securities. If you want to trade them with through a regulated platform, which is the only place you can trade a security, then you've got to go through some checks and balances.
Yeah, and that's all to the investor's benefit, if you will, or
to an extent,
exposure.
It's not for everyone, right? There's a lot of people that want anonymity, but if you think about how is BlackRock going to get into digital assets? Well, they can't deal with anonymous people. They have to have somebody on the other side that's gone through KYC, AML, so they're not going against any sort of regulation that they have to follow. And so as the US government starts to gate digital assets, so Bitcoin, Ethereum, digital securities, and they start closing it in with a fence system, then sure, you'll have bad actors that want to keep anonymity. They'll move out of the space and they'll move offshore. But the BlackRocks of the world that do the real volumes and the Fidelities of the world will start getting involved because now they know it's a closed system. And so you give up one part to get the other. Now, given that the current market cap of blockchain assets is $2.5 trillion, but if you move all equities on the blockchain, that's another 120 odd trillion. It probably makes a lot of sense to move into the gated system because then that institutional money can start to play.
Right. All right. So me as a individual investor want to get involved in this space. Douglas, how do I do it? How do you go out there? How do you decide what assets are worth buying and which ones you should just avoid like the plague?
I think it's the whole DYOR, right? Do your own research. Don't rely on someone else that's telling it. There's a lot of hype out there. There's a lot of YouTube videos and shows that pump this and talk about that. You've really got to dig down and find out for yourself. But I think it's always important if you invest in something that you know who's actually behind it, and you know who's actually, the officers of that company or who owns the company. That's very important when you look at, what's going on with Ukraine and Russia right now, in that if something's owned by Russia, no one wants to own it. And you've got no idea when it comes to some utility tokens that are out there, but you would with a security. But doing your own research is very, very important. And when you have something that's registered or sits on the Edgar database, you can actually go to the SEC and read about a company, not just have to rely upon what you're hearing from a friend.
Yeah. Well, it's interesting because the whole concept of disclosure assumes people are a lot smarter than they really are in the real world. That's the one flaw. And look, I once read a book how companies, basically manipulate their financial statements to lure in or keep in investors. So, the sophistication level for digital assets certainly it's just not there for virtually all individual investors going into it.
Well, I'd say that's probably true for ones that are not digital securities, for sure. I think that there's a lot of hype. If something isn't regulated, it probably has rocket ships next to it whenever it's put out on a tweet, and everyone just talks about the upside, and there's no such thing as a risk factor. I think for our offering with our prospectus, I think we had over 100 pages of risk factors, things that could go wrong. And, when we first did our offering, we had people coming to us saying, this must be a scam because you're not guaranteeing me a percentage return every year. No, that's not a scam. And also there's a paragraph that says I can lose everything. Again, that's standard practice for any prospectus in the United States. But a lot of folks in the crypto arena think that anything they buy should be a 10 times or 20 times in a year. But, securities aren't like that. There's downside as well as upside. And I think, as a broker dealer, our company has to make sure that everyone understands the risks involved.
Yeah, well, I always said when you look at a private placement and you look at the risk factors, basically the way the law is written now, you basically have to tell everybody you're crazy to buy this. You're almost certainly going to lose all your money if you do. And, you should probably go see your psychiatrist. But if you still want to invest, here are the risk factors. And, it's a little absurd, but because the risk factors can be so overstated, but nobody reads them and they just buy.
Well, I think you've boiled it down well, but it means that the company at least has warned someone about what could go wrong. And there's a lot of investment opportunities out there in the digital space today that have nothing, nowhere about what could go wrong.
So true.
And investors walk in blindly because they saw a YouTube show or they read something from somewhere or a friend told them to buy it. And there's absolutely no resource to go to try to actually find out about the protocol token they're buying or the digital token they're buying. And that's a problem. Now with the digital security, there is somewhere to go to read about it, to find out what's going on.
Yeah. Yeah. Well, I like the way you said that that it's actually the mainstream that's going digital. It's not the digital that's going mainstream.
Well, look, you're always moving forward into the future, hopefully. And that's what we expect.
All right. So how do we find you guys? How do we connect with you? Do you take accounts from individuals? How does this work?
Yeah, we do. We take accounts from individuals. Individuals can sign up at securities.inx.co, or they could look at us at inx.co. Our equity trades on the Canadian NEO exchange as INXD, and our security token trades on our securities exchange that you can access through inx.co. You can follow us on Twitter, INX_group, or just follow me at DC Borthwick.
All right. We'll have links in the show notes to all of what you just mentioned, securities.inx.co. Got it up on my screen now. If you've got a question for Doug, shoot me an email to kl@kerrylutz.com. We'll get you an answer. I know this is an emerging area, a lot of confusion, a lot of uncertainty, but it really is, I don't want to say that it's going mainstream, but it's going into the mainstream consciousness of investors, something you need to keep an eye on. Hey, go over to the site, financialsurvivalnetwork.com. sign up for your free newsletter. We cover a lot of digital asset information on the site, something you need to know about, especially with what's going on in the world today with fiat currencies and everything else that's happening. Doug, really appreciate you coming on, and we will definitely talk to you again soon.
You got it. Thank you very much. Thank you so much for having me.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.